Welcome back to New Money, and I've got David Shapiro joining me from New York in the early hours of the morning. David, thanks for joining us. David, you mentioned the employment numbers for March were quite encouraging. How does this align with the concern that everyone's on? Everyone always picks up words, recession.
Well, the jobs numbers was historical. I mean, it was from previous month. It's looking forward that we've got the worries. Where the worries are coming in is that if these tariffs stay in force, you must understand tariffs is a tax. If you go look at our budget, you'll go see excise duties and all other taxes that are collected from goods that come into the country. It's a tax. And who pays the tax will be the American people. And of course, this is a massive tax in the region of about, I don't know, I think the last number I saw was about 600 billion or something like that. It's a huge amount. Trump wants to use that to reduce the deficit. But what happens is the American people who are already under pressure, and we can come back to when Trump was elected, what he promised. But what is going to happen? They're already feeling the crunch of higher interest rates. They have spent the COVID money or their COVID savings, and they're going to be very discerning about spending, particularly if prices go up. And prices will go up of everything that they buy, from motor cars to avocados. Now, when you start to hold back on your spending, of course, that affects the top line of a business. When it affects the top line of a business, it means that margins are reduced or profits are reduced. When profits are reduced, what do? They start to cut back on expenditure and start to lay off staff. So you get this downward cycle that emerges because of the higher prices that the country is going to pay for tariffs. Also, what happens is to exporters here, there are reciprocal tariffs, so there's this very strong anti-American feeling building up. People are not going to buy American goods. And you can also get it, which I picked up yesterday here, is that even in Manhattan, people of the Chamber of Commerce very worried because the Canadians are not visiting. They despise the Americans. They're booing the national anthem. They don't want to buy American goods either. So that starts to play on the tourism side of, say, Manhattan. I'm trying to give an example how recessions happen. So less tourists come. They don't go up the Empire State. They collect less money there. And so it goes. Broadway suffers because you haven't got the tourists wanting to come to watch shows. So all of this starts to unwind the economy. And instead of growing, you go into the opposite, which is a recession. So the longer we go with these higher tariffs, the more chance of a recession.
And what is your feeling about the chance of recession?
Well, I can only go with what I read, and it's gone from 25%. Now it's as high as 60 to 70% of a chance of a recession as things stand, unless Trump takes a step back. So he can change it because the tariffs are only being felt from today. They're only coming into effect now, but they can easily be stopped. And so that's why I'm saying Trump is playing a game now with the American economy, with American consumers. Bryan, there were widespread, and I don't know whether it's been publicized, protests yesterday in the United States, across all 50 states, even red states, meaning Republican states. There was a huge outcry against Trump's policies and also about, the cutting of government expenditure. It was called hands off. And I'm talking about hundreds of thousands of people. So his popularity and Musk's popularity are plunging. I don't know if it's evident there, but you don't want to buy a Tesla. His share price Musk has collapsed. So that gives you an idea of the anti-Trump sentiment that is building up here and how people feel about this. They don't want to go into a recession.
David, there is some dynamite, because surely Trump promised lower taxes. And therefore,
yes,
if they receive this, you spoke about $600 billion, he's able to cut taxes. And then if the Federal Reserve, if the recession starts to come about, the Federal Reserve can start to cut interest rates.
They can do it. They're not likely to do it at this stage. That's what Powell said. He's not going to, that's what Trump's trying to push him to do. he keeps saying push down rates, but there's no evidence. Powell, looks at the data. There might be something that comes out of the collapse that we've seen in the market, but he was pretty calm on Friday, not suggesting anything. I think that the big issue in the market is that the market's now beginning to discount a major fall in the economy. So and it's going to affect, Brian, you know what worries me more than anything? What are the champions? What got us through 2022 was AI and the emergence of this very strong technology sector. That was America's, those are the industries which are so important to America's industrial, or call it business strength. And he's tampering with those. If you've looked at Apple, Apple is going to be severely hit by these reciprocal tariffs and by tariffs. So you're going to weaken the biggest company in America. Those are the kind of concerns that worry me. It's not, yes, of course, the grocer on the corner or the supermarket, but you're talking about weakening the NVIDIAs, the Apples, the Alphabets, the Google, the Microsoft. Those are the companies that can take severe hits, and China's just laughing, because China can come in and fill this gap. So I think those are the kind of worries that are driving sentiment down and also worrying the American people.
David, you've always said to me, there are 50 to 60 companies that one can look at, one gets all the research on. You invest in anything between 20 to 25. Are there any, you talked about now, you've made the comments, Apple. I mean, when you look at what happened to technology, down 28%, I also don't understand why all the commodity prices, which have had no effect on tariffs, have also collapsed last week. But when you look at this portfolios, do you think you're going to do a lot of switching from company A to company B? I'm not saying Apple to another. Or are we're going to ride this through?
We came into the year before Trump started on his madness, believing that, we knew that technology shares were expensive. We expected a bit of not a downturn, but a derating. Derating means that the companies don't grow at the same, the share price doesn't go up at the same level of profit growth. That we were expecting that. And we were talking about a broadening out of market where rates would come down, banks would benefit because of more activity, more merger and merger activity, that kind of things happening, more transactional, more buying of machinery and so on than banks were where we were targeting. But banks have come down now. Banks have come crashing down because of concerns about no growth. And they're putting on hold all these projects that they had. The other one is commodities as a reflection of growth, of global growth. No one's going to build new factories. No one's going to expand their economies under these kind of conditions. Everybody will take a step backwards, as they did during COVID, and saying, okay, let's see where this goes before we do anything. So COVID was helped by governments handing out billions of dollars or whatever currency you're talking about, to people who were stuck at home to go out and spend. And then they started to spend, improving their homes and so on. At the moment, we haven't got anything like that. That's what I'm saying. This is the big fear, is that Trump says, I'm right, I know what I'm doing, and he says it by himself. He's got a small inner circle. Not even Scott Bessent, who's the Treasury Secretary, was involved in these tariff decisions, the final tariff decision. He wasn't involved, and he's a clever man. So you've got an idea of how Trump operates, with an inner circle. And as I say, on the weekend, while all these protests were happening and the markets are collapsing, he was playing a golf tournament.
David, while the investment expression is never try to catch a falling knife, and one can never predict the top or bottom of a market. However, for those sitting in cash and have been waiting for this fall, do you think the time is right to start nibbling and getting back into the market? And what is your advice to existing investors regarding selling out?
I think it's too late to sell out, because we always do it at the wrong time. I think this will reverse pretty sharply. For those who are waiting on the sideline, just let the dust settle. This could go on for another 2 days. In fact, this could go on for some time if Trump is adamant. So we don't know what's in his mind. We don't know, narcissists, egotists, people like that do not want to be proved to be wrong. So you're dealing with the psychology of this man, not with fundamentals of the market. And that's the difficulty. Not even Freud could have psychoanalyzed Mr. Trump.
Okay, David, so that leads me to one of my last questions. We've got reporting their first quarter numbers. Obviously, that'll be very different to what may be in the next. But do you think the results will have any more further pushing the market down or up? How do you see the first quarter's results coming out?
So the market will ignore the numbers. They'll look for the outlook statements. They'll look for guidance from how the CEOs or how management see the future, how they are reading the situation. So I think the first up are going to be banks. I think coming where we now, probably by the end of this week or the end of next week, into next week, we'll hear from all the major banks, which includes JP Morgan. Jamie Dimon, a very influential man, will give his views. Does anybody listen to him? We'll have to see. I'm sure, Bryan, at this stage, from Monday onwards, there's going to be a lot of knocking on the White House's door by people who are running the U.S. economy, like the Jamie Dimons, like the Tim Cooks of Apple, and so on.
David,
I think they're not going to take this lying down.
David, thanks a million. I've just got to finish off quickly because I've been in the markets for 60 years, and to help people grasp the weight of that, it's worth pointing out that 720 months. Over the time, I've experienced 16 significant market downturns. During times like this, my role shifts from financial advisor and financial nanny to financial psychologist, helping investors avoid panic and keeping perspective. There's a clear distinction between investors who earn income, those seeking growth. For those looking for a combination of both. But for those relying on income, certainty and security are key. That's why I've often recommended keeping funds in South Africa, where interest rates are comfortably above inflation. However, it's essential to look beyond the gross interest rate. Taxation can take a real bite out of returns. When it comes to growth, it's always a long-term conversation, and it's 5 to 7 years at the very least. That means riding out short-term events like the latest tariff shocks, which have understandably rattled sentiment. As I mentioned at the start of the program, while fill levers may feel high right now, we need to bring the conversation back to economic fundamentals. Companies will adapt, they always do, and in many cases, they emerge stronger. There are real opportunities now, especially with many investors having sat on the sidelines in cash, waiting for a better entry point. It takes courage to start nibbling at this level, but we've already seen several people begin to phase back into the market, even at the higher levels. My advice, and let me stress it again, it's too short now. You've got to be thinking long term, and if you have money to consider phasing in gradually over the next 3 to 9 months. David, thank you for joining me this evening. It's important to note our program is to provide information, should not be construed as advice. Next week's program, we'll be dealing with healthcare, and if you need to get hold of me, my details will appear on the screen. Thank you for watching, and good night.